Hello dear traders, let's discuss developments in the US stock market. The highlight of the day on Monday was the speech by Jerome Powell. He said that next time the central bank is ready to raise interest rates by 50 basis points at a time instead of 25 to tame soaring inflation. Wall Street responded with an immediate trend reversal, and stock indexes skidded and the US dollar gained ground, but the spike was short-lived. The US stock market closed yesterday with minor losses. The Dow Jones and the Nasdaq closed 0.58% and 0.4% respectively. The S&P 500 edged down 0.04% to trade at 4,477 points. With such a muted response, the index is expected to trade between 4,420 and 4,480 today. Statements of the Fed's leader are bearish for stocks in the long term. Nevertheless, the pre-market shows that investors are not scared. The S&P 500 is trading slightly higher with the equal chances of further growth or fall. Other Fed's policymakers have already signaled the prospects of a rate hike by 50 basis points, so Powell's remarks did not come as a surprise. Investors realized that the Fed's priority is the struggle against inflation. The regulator is ready for more aggressive tightening in case economic indicators get worse. The Fed's nearest policy meeting is scheduled for May 4. Until then, traders are sitting on the sidelines of several crucial events. The NATO summit, the EU summit, and the G7 annual summit are due this week. They could serve as a market catalysts, making a more serious impact on the geopolitics than Powell's comments. So, traders are braced for higher volatility at the end of the week. The US dollar gets more lucrative provided that the Fed is more determined to fight against inflation. In the light of Powell's remarks, the US dollar index rebounded to 98.80. Following a modest climb, it's heading downwards again. Our analysts project the corridor between 98.50 and 99.10 for the index today. The outlook for the greenback remains bullish. Yields of the benchmark 10-year treasuries stand at 2.34%, the highest mark in 3 years. Growing yields make investments in dollar-denominated assets more attractive. The Fed's hawkish rhetoric also reinforces the US dollar strength. Markets are adjusting to higher risks and do not burst into panic after every sharp remark. For the time being, the Russian-Ukraine talks subdue the US dollar's rally. Any progress towards a peaceful solution takes a shine off the greenback. Conversely, any escalation in the hostilities on new sanctions feed the US dollar's strength. The USD CAD pair is trading higher amid the greenback's advance. It grew to 1.2620 yesterday. Nevertheless, the greenback may lose its momentum, so the currency pair could extend its slide. The corridor for the trading instrument is defined between 1.25 and 1.27, and yesterday Powell's speech was the market catalyst that also influenced the USD CAD pair. Today, traders are focused on growing commodity prices. Oil resumed its uptrend in light of statements from EU officials about an embargo on Russian oil. Petroleum is Canada's major export commodity, hence a rally in the oil market provides the loonie with support. Bitcoin eventually woke up after a long hibernation, making slight efforts to recover. The number one cryptocurrency rose following statements of the Fed's chairman, and the token closed at 42,814, having climbed 4.4% intraday. This activity inside a protracted trading range gives traders some hope for Bitcoin's recovery, though it could be sluggish. Bitcoin has got stuck in a wide range between 32,000 and 45,000 for a few months straight. The price is expected to test 44,000 in the near future. If Bitcoin makes it, the test will be followed by another attempt to break the upper border of the range and a high at $45,600. And you've watched the review of the New York session for today. As we predicted, Powell's remarks set the stock market in motion. Later today, we will be able to assess the market response in full. Keep track of market developments on InstaForex TV channel and see you tomorrow.